All right, let's go through my pre-market preparation, reading the narrative, ranking and distilling for today for both crude and the S&P. We'll start with crude. Here is what my pre-market posts looked like. Structural reference, bearish level up here, neutral level down there. That's all we've got. Where did they come from? What did I ignore? What did I use? What do we think? Starting with the yearly, there's really nothing for us. A lot of times you'll see me come down here and click right here because this is where we are when I'm releasing that prep. And so I just get a vertical line on all these charts so you can look at the long-term VWAPs and say, okay, that's where the hard right edge was when we were about to open. So yearly, again, right here, yeah, we've rejected VWAP, but I mean, nothing to lean on, nothing for us to use there. Over here, we were just starting to bounce right there. It's hard to see, I know. This bar right here is where we were. So this is, I would say, a bullish chart because we're at such an extreme, well below the -2 at this point in time on the quarterly. But prior value, right? Prior value. We have recently done a return pullback inside, so that's a bearish factor. So really a little bit of both there in terms of, okay, pretty low extremes here. We could see more of an up move, but we've seen us held recently by prior value, so that's bearish. So almost a neutral on that chart. Although, keep in mind this level around 38.25, we do use that in our prep. I'll just go ahead and mark it. Going down to the monthly, where were we coming into the open? Right here. So the month has been in this kind of grind. You know, it was imbalanced down, right? Clearly gets imbalanced down and just really holds. But this is the first real pullback we've seen the whole month of since we had this clear imbalance. And what has it done? See a pattern? What I see is a bull flag. So kind of aware of that. I'm not saying that we just bring all kinds of pattern analysis and technical analysis to these charts, but what is the analysis as we're coming into the open? Well, it's that we've started to see some buying from what's essentially a market that's failed to do a good job of staying imbalanced down. Right? We should have seen some rejections from here and some movement towards the 1.5, towards the 2, but that's not happening. Just holding. So it's almost like a time acceptance shift in condition on this chart to where this now becomes not a place that I want to put as a reference and lean on monthly developing value area low to the tick. That I wouldn't go that far, but I would mark this chart as more of a bullish chart based on its inability to stay imbalanced down with any decent semblance of imbalance down. So no real references for this chart, but kind of a nod towards the bullish a bit. Now, on to the weekly. Where were we as we came into the open? Okay, so the weekly is, yes, it's Tuesday, so we have a fresh week. Most recent rejection on this chart would be kind of from prior value low. And now we've started to put in this uptrend. We had a small, tiny balance here, right? And that's where we're kind of breaking out of. And so coming into the open, we are saying, okay, are we going to hold essentially imbalance up for the week? The week's trying to get imbalanced up. And we have a likely destination, by the way, on the week, which, by the way, as I mentioned, it's the same level as quarterly prior value. See, at the exact same levels. Global crosshair, tools, global cursor on. And if you want the charts to track with each other, I have a hotkey Alt-W for that. Otherwise, keep that off so it doesn't. You don't click here and all your charts move everywhere. But it is very good if you do want to get all your charts to move to a specific spot. Anyways, likely destination higher. So this is also a nod, for the bulls, but. This recent hold underneath quarterly, as we mentioned, is a bearish thing. And the yearly is heading down, maybe towards its likely destination based on what's happening. So some bullish, some bearish factors. What about structurally? Well, and let me back up for a second. How would we summarize the long-term VWAPs? That would be short-term bullish. Why is it short-term bullish? Buyers taking control. The weekly putting a destination higher, the monthly failing to stay imbalanced down in a healthy way. Other than that, we've got some vague and mixed signals from the much higher time frames. And then in terms of our structural narrative, depending on how you did your CVAs, right? Some people started to balance like I did. And obviously this day filled in here, so there's some semblance of balance occurring. If you do look at what that looks like, this day spent a large portion of it with balancing further, and this day spent a large portion balancing even further. So that's the CVA I have. However, some people felt that this obviously was not real. You've got balance here, and then balance here, and then balance here, and then balance kind of migrating lower. So not really any major overlap, right? And then this is where you start to have some real balance overlap. So if we merge these two, that actually was exactly where the market couldn't get through lower today. And I could see that on you see the ledge right here? That's exactly what that is. It's a very kind of robust balance within some overall balance that the market's been in. Not only that, but if you just leaned on prior value, you've got that same upper end right there which held us. And I can trust me, when I was short from here looking for the movement across the CVA, I was very keen and very alert to how we handled this nice prior value area from yesterday. So, but anyways, coming into the open, where are we? We are actually bearish, right? Here's where that CVA level is, 3780. So the overnight session tried to give a breakout pullback, tried to be imbalanced up. It fails. We go rotational, both in terms of DVA and the CVA structure. So that leads us to what I consolidated everything to. I went neutral on the levels because there's some short-term bullishness on the long-term VWAPs, but there's some recent bearish shift in conditions in terms of accepting back below the composite value high. And I did feel like that 3820s confluent level was mostly bearish if we got up there. If we went up there early and tested it, I wanted to lean short off against it unless we broke above it. But the 3780 was critical. I kind of distilled it down to saying, okay, what happens with the CVA? So we would have had this level on the chart for the CVA. We would have had the composite value low down here. And then I had, weekly prior value area was that other mark on the chart. 3680 roughly. That's the other mark on the chart. And then this confluent level of quarterly prior value high and weekly prior value high is this level at 3825, which I had read. So there you go. That's exactly what the levels are. And, just real quickly, what kind of trades could we have seen? Well, obviously, this is a no-brainer off the open, an extreme fade for the return pullback of the CVA, right? You still have some dissonance here in the fact that the weekly is trying to put something together, trying to maybe stay imbalanced up. We have dissonance in terms of prior value providing support for this market, and those were the narratives that ultimately won. That's fine, though. You get a great potential partial profits here. I was looking for this to drop and at least get the developing value low. Didn't happen. Buyers take over. Beautiful trade here. Go with the imbalance. Go with the breakout pullback. Yeah, is this a potential bearish inflection up here? You betcha. We got some prior values we could run into. Ultimately, it's a bit more of a destination than a really fantastic bearish inflection. I might, if I could go back in hindsight and go back to this morning, I might have made that level neutral instead of fully bearish. So pretty straightforward stuff. And then opportunities here, but this is after the close, right? So, all right, let's go to the S&P. S&P, all neutral levels for me here. We can see some CBA structure here, a couple of probably prior value lines, and then this guy right here, which I said it's attempting to work towards that very important 34.15 to 34.20. Why is that, just right off the bat, why is that very important? Why is that the first thing out of my mouth that that's where this market is working towards? We didn't get there today, by the way. Well, it's the quarterly, right? To me, the quarter, this looks like it's pretty darn vulnerable. And by the way, go to the CVA. Oh, look, it's a poor high. So poor high on the CVA, which is quarterly developing value. So I feel like that area is prime for something of a wick to give kind of another extreme fade short opportunity on that chart. Yet, why is it neutral instead of a major bear level? Because guess what? I did have this as a major bear level before. Well, guess what? That's because, I'll say guess what 10 times here. That's because this is a fresh condition change. This is a very micro. I don't count this as the full, extreme fade, return to rotational behavior. But once you go here and then you get that nice movement up, this is the real retest. This is the real extreme fade. Well, guess what? Poor high, we went away from that level. If we come back up here again, I'm not just anxious to just put a limit order short up here, not to mention the context of what's going on in the year. Major bull inflection, which we've recently maintained imbalance up for the year. Major bull inflection. That's why yesterday in my prep I was saying swing long S&P. So this is a major, it's almost like when we called the really good short and we started to get some opportunities to get short and the other time frames started to get imbalanced down, even on the monthly and weekly, to give us those trades, to get to here where it was really bullish. Well, guess what? When we first started to bounce, I'm giving a lot of weight to this being very bearish. But then now that we've gone to VWAP and held again, and the yearly imbalance, by the way, is held again, and we're pushing right back up into this area, I think it's trying to get there. I think we have a poor high, so the lack of completion on the auction process at this 34.15 area. And I'm not so bearish, Sure, if we wick it and take out, put some excess above there, then I'll look to be bearish. But I need to see that happen. Right now, I just think it's more like a magnet. It would try to get there. Anyways, let's continue. As we get to the... So, you pretty much understand the view. Yearly, imbalance up. That's a bull zone. No inflection for us today, though. We didn't come anywhere near there. This was my major first sentence out of my mouth on the daily market insight. Market's heading towards that level. Didn't happen. Dropping down in time frames. What's going on? Okay, the monthly is actually it's been in a bit of a kind of it tried to get imbalanced down. It accepted into prior value. We hit the destination. But then we don't hold a strong imbalance down and then continue. We actually go more of kind of a slow trend, half rotational, half imbalanced kind of deal. and then yet again we find support off this 33.11 or whatever it is area, which by the way is below the purview, or is that the right word? Below the scope of this chart, 33.11. We don't have it on there, right? So it's not a major factor for today, but that is a substantial area. The initial move up yesterday had moved to weekly prior value high. We pulled back, and now coming into the open, we're actually breaking weekly prior value. So that's a spot to look out for. Can we maintain that break? And that's why I had mentioned a scenario in my prep. One scenario, see if we hold that 33.90 for a retest, could get long, and then finish that move up into 34.20, which we know is the quarterly developing value high. So for me, it's, there's some decent bullishness to this market. Nothing really to like lean on that's like major bullish line in the sand from long-term VWAPs today as a day trader, right? So I kept things neutral in terms of the prep, mentioned, the destination, and, pretty much saw that we were working that way. Listed 33.90 as kind of a hypo to lean on, and that's that weekly prior value. We're kind of, we're bullish the monthly, but we're in open space. We don't have anything to really lean on unless we really retraced deeply to monthly development value low or whatnot. However, on the weekly, we have something right off the bat there to where we might could hold it and drive and give us something tradable in the near term. So that's what I distilled things down to on the long-term VWAP. In terms of CVAs, pretty long toothy profile here. Not a whole lot to it. A lot of times when you see that, without it being really nice and Gaussian or whatnot, you can see some more filling in, and that kind of looks like what we're seeing. Some of you may be saying, why was composite value high 34.05? Why was that not on your prep? And that's a really good question. 34.05, not on the prep. A lot of times, if my prep chart, because this is something that I put out there for not only myself and you guys to double check stuff, but also for non-students just to get good levels and have a read. If it's going to be, the people who put out subscription services with just levels all over the place and they say, look, it bounced off one, not a big fan of that. I really do try to give the most clarity I have and the best narrative and whatnot. And I chose today to lean more on the long-term VWAP narrative and to lean more on 33.90 weekly prior value and for the destination move into the quarterly. So that was a choice that I made. I have other students who essentially kicked my tail today in terms of prep by saying, hey, we're focused, we have a balance area we moved into here, and we are going to focus on that. And unless we break and hold beyond that, which we never did today, as you see, then I'm gonna keep my my longs at bay. And so that's perfectly fine. The only argument I would have to that is the recency of those, right? Most recently, we've broken and headed here and then accepted back in, and now, breaking this, yesterday's prior value and whatnot. And so, and even so, we know that this poor high is up here. So do I really just want to short this because there was an older structure there? Not as much in my mind today. But as the day unfolds and you continually see that the sellers are responding from that area, it does become a place where you can go with what is on the day. It's a little bit of an advanced topic there, but even today we saw poor highs that needed to be taken out and never were. So interesting stuff. In terms of trades, we early on, I think you could go with imbalance up. Again, that's into the face of the composite structure, but it's going with the break of weekly prior value. Monthly is bullish, yearly is bullish, quarterly is rotational but headed towards what I think is the most important area. And so I can go with an imbalance up. I chose to not heavily weight this older CVA high, so I can go imbalance up here. Fine. Well, guess what? It breaks down. We clearly go rotational. I think you can take some shorts. Maybe some of you took multiple shorts from this area once that happened. That's fine. But I definitely like this one. Now, what do we have here? This, my friends, it's hard to see because of the choppier action here, but it's an imbalanced pullback. Today's Tuesday. We do have weekly developing value. It is an overall breakout pullback of my most important 3390s. And so when I saw the buying response from VWAP and we just wick that, it is a spring pattern from the prior swing low. So to me, that is a place to look to get long. And so I liked the long there. Again, you're up into the CVA again and you have a lot of trouble. I thought we were compressing into this level even, right? That we would ultimately pop and break this. Didn't happen. Did not happen. But that was my view and that was my take. So, a couple of trade opportunities in this area here. And that's on a 3-minute chart. That's what my review looks like. See, the two long opportunities, the short and the long. And then I made sure to note, look, if there was some conflicting narratives. So if you were focused on the structural narrative, well then guess what? You could have shorted this, you could have shorted this, you could have shorted this. No problem. All right, that's all I got for you.